We just got the fresh real GDP data came out this morning from Stats Canada, and we just got two bad news. Number one bad news was the GDP is flatlining. The forecast was around 0.3%, and the real GDP came out at 0.2% for the month of February. And the second bad news was they revised the January number downward by 0.1%. So we saw the growth in January. We all were hyped up. Oh, the economy is growing, which is good. But actually, they revised the January number by 0.1% downward. So all of the financial media is full up with this news that they're expecting Bank of Canada to start cutting rates as early as from the June meeting, because the next meeting is in the month of June, and we're going to get two more inflation data before that meeting. And the financial media is kind of building this narrative that Bank of Canada has no choice. They have to cut rates because the economy is, flatlining, and from there it may go downward. That's the narrative is being played, and some economists are predicting an imminent rate cuts in the month of June, not July, in the month of June. But not a lot of economists are talking about the Canadian dollar. I think one or two economists I've heard, they mentioned their concern about weaker Canadian dollar, but majority of the economists are not even discussing it. And this is quite concerning, because if they cut rates, the dollar will tank. Okay, so I see two possibilities here. Number one, Bank of Canada may be front running the market. They may keep their tone very dovish. They will tell that they are going to cut rates before cutting rates in reality, which will front run the market. Okay, because if they do it, if they cut the rates, especially before the Federal Reserve, what's going to happen that we are already 50 basis points lower than Fed's fund rate. If we start cutting rates earlier than Federal Reserve, that divergence will go even bigger. Okay, so the delta between the Federal Reserve fund rates and Bank of Canada's overnight rate is going to go even bigger. So that divergence will put a lot of pressure on Canadian dollar. If that happens, then Canadian dollar will literally tank, guys. If you look at this chart, you can see it's already trading at 72 cents against USD. And if you understand the technical analysis, you can see that it is testing the support line. If it breaks that support, that means it is likely to go even 68 or even 62 cents against US dollar. Who knows? So that is a very tricky situation. If they cut rates, especially before Federal Reserve, our Canadian dollar will tank, and we will lose a bigger portion of our purchasing power. So a lot of people are thinking in their head that this rate cuts is going to help them. Okay, and they're thinking, oh, our monthly mortgage payments will become cheaper. But in reality, everything else will become expensive, because our Canadian dollar will lose its purchasing power against USD, which will make the rest of the stuff that we buy even more expensive, which means even more inflation for us. Okay, so keep this in mind, guys. This rate cut scenario is not a good scenario for us. And actually, if they keep the rates at this level, it is better than cutting rates early. Because what will happen that we will lose more purchasing power if we get the rate cuts earlier than Federal Reserve. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. This is the report I see from RBC this morning, and according to them, you can see that it is showing the GDP per capita and real GDP, right? You can see the blue line is growing up, which is real GDP adjusted with inflation, but that number is actually pumped because of the 2% population growth, okay? But if you look at the GDP per capita, the real GDP per capita, that is literally falling off the cliff. And this is what it is telling us: our quality of life is deteriorating. We may be able to, earning more dollars, but we're not able to buy more stuff with that dollar. That is showing us that our Canadian dollar is not going far enough. It's not giving us enough stuff that we need to sustain our quality of life. This needs to be fixed. There are a few things that the government can do to fix this. Number one, they should stop spending like drunken sailor. Okay, they should keep the rates higher enough so that we can flush the system from malinvestment and misalignment of resources. It takes time. It will take years before this stuff can get better. There is no magic pill, guys. If Pierre Poilievre is going to come to the power, he may not even fix it, at least in the next 4 years. So take a chill pill and hope that somebody with the same mindset will take control and fix these things for us. Otherwise, we are going towards a very, very bad economic times. You let me know what you think about that. Put your comments down below. Give me a subscribe and a thumbs up, and I'll see you in my next video. Sorry for the interruption, guys. Just wanted to let you know that we have a team of realtors which is covering the entire GTA as well as some outside areas as well, like Brent region where I am based off, and I help out the clients in this region as well. So if you have any needs with regards to real estate transactions, buying, selling, investing, renting, let me know. There is a link down there where you can book a one-to-one consulting call with me, and we will be more than happy to help you out.